Welcome to our Forex and CFD's market update for Tuesday, September 17th, 2013. Let's go ahead and take a look at our calendar here for the past 24 hours. We saw the release of the RBA policy meeting minutes for September. They indicated that RBA policymakers believe the Australian dollar is still too strong, and they kept the door open for additional monetary easing in Australia if that is required. We saw a very significant fall in FDI in China, down to 0.6% year over year. A much higher print, as we can see here, was expected, so that was a shocker. The only data really released in Japan overnight were some minor Tokyo condominium sales data. They came in stronger than expected. We did see a little bit of a pullback in the current account for the Eurozone, down to just under 17 billion euro. Our big data in the UK today was the CPI data. The CPI data actually came in a little bit lighter than expected. We saw headline inflation move lower, and then we also saw PPI come in below expectations. Those caused the British pound to come off during the European session today. So we saw CPI come in at 2.7% year over year at the headline number. That was down from 2.8%. And then, of course, the core rate came in right at 2.0%. We saw a significant move higher in the euro during the European session. The ZEW survey came in. The economic sentiment number came in much stronger than expected at 58.6. And the current situation also came in much better than expected at 30.06. Finally, the German component of the index came in nice print at 49.6. So these data added to the strength of the euro during the European session today. We'll see if those gains can be continued during the North American session. We had Eurozone trade balance data also released today, not really market moving there. During the U.S. session, of course, we will see the first of 2 days of FOMC policy deliberations. The Fed is going to consider a possible taper to its QE policy, possibly as much as $10 billion in taper expected, mostly likely in the form of a reduction in monthly treasury purchases. We could see possibly a $15 billion taper, or somewhere between $10 and $15 billion. A $15 billion taper may result in a stronger dollar. We're also going to get some CPI data here in the U.S. today. We expect consumer price inflation to remain relatively subdued in the U.S., coming in probably around 1.6%. Let's go ahead and take a look at some of our asset classes other than FX today. Starting off with the metals complex. Here we have a daily chart of gold against the US dollar. You can see gold is currently trading around $13.17 per ounce to the US dollar. It moved higher and tested some technical resistance today. That is after yesterday's significant sell-off. Much the same story here in silver. We have seen a partial recovery from yesterday's sell-off. Silver now trading around 21.95 and traded as high as 22.10 earlier during the Asian session. Let's go ahead and take a look at the energy complex. These are a daily chart of Brent crude futures. We see a marginal gain there, an inside bar so far today, but marginal gain for Brent crude futures trading as high as 109.73. And finally, also here in the energy complex, we see West Texas Intermediate traded lower today, traded as low as 105.23, and then recovered and is now trading around 105.72. Let's go ahead and take a look at some Forex action, some FX action. We see an improvement here in the Euro complex. Some of these data were underwater earlier, some of these FX pairs. They've since recovered on the heels of the ZEW survey data in the Eurozone and in Germany. We can see here the Japanese yen is also underwater across the board. Let's go ahead and take a look at the specific pairs. This is our daily US dollar activity index. Friends, we can see the US dollar has been on the defensive ever since September 6th, so call that 10 trading days or so. We see it below the blue horizontal line here, which indicates a very significant downward trend in the US dollar. Of course, all eyes are on the Federal Reserve, the FOMC. Its policy decision is expected tomorrow. Those expectations are definitely weighing on the dollar. We saw the better than expected Eurozone and German data today, and we see a nice upward trend here for the euro across the board. We'll see if it can sustain these moves later in the North American session. Japanese financial markets reopened overnight. Of course, nothing of great significance as far as economic numbers are concerned. We will see some comments from Bank of Japan Governor Kuroda later in the week. The Japanese yen has a downward trend today, as evidenced by this move into negative territory on the activity index for the day. British pound also underwater. It is trading below the blue line here in negative territory. It was stronger earlier today, but the UK CPI data came in right around expectations. Nothing really far out of whack that would challenge the Bank of England's determination to leave rates unchanged to about 2016. Nonetheless, the bond vigilantes are out, and they expect a hike from the Bank of England as early as Q1 2015. Getting the Swiss National Bank's interest rate decision here this week. We can see the Swiss franc is trending higher today and is expected to continue to move higher during the North American session. Here we have the Australian dollar. The Australian dollar is also in positive territory. That is nice recovery from the past couple days. Of course, the Australian dollar took its cues from the RBA report overnight, indicating that the Aussie is still a little too weak. We might anticipate the Australian dollar could fall back over the near term to medium term on the Aussie's clear determination to push RBA determination to push the Aussie lower. Finally, here we have the Canadian dollar and the New Zealand dollar. This is the Canadian dollar. We can see after a nice start to the month of September, the Canadian dollar has been in a downward trend here for the past few trading days. We'll see if the C dollar will continue that downward move. Finally, as we were saying, the New Zealand dollar here has outperformed most other currencies for the month of September, mostly here in positive territory. We saw a couple days, maybe 3 or 4 days, below in negative territory, but the strong upward trend in Kiwi continues. Let's go ahead and take a look at some majors and some cross rates we're keeping an eye on. This is a daily chart of the euro against the US dollar. You can see very nice technical trading activity here in the euro. Yesterday, the euro's intraday high coincided with this yellow down trend line coming in right around the high, as we said. Today's activity, we can see the intraday low was just above key technical support, as indicated by this red horizontal line. We've drawn a blue up arrow there to further identify that. And then almost perfectly, today's intraday high is right around this red intraday resistance line. We'll call that some Fibonacci support and resistance lines from this recent move here from the August high down to the September low. So very nice technical move today in the euro against the dollar. This is a daily chart of the Swiss franc against the Japanese yen. This is sometimes a very nice cross to trade. We highlighted this because the intraday high for the Swiss yen cross is right around this yellow downtrend line. It's a longer term downtrend line. We drew some Fibonacci extension lines here in blue. You can see them. We can see that over the past 4 trading days, Swiss franc has been trying to establish a base right around this Fibonacci extension area, coming in at 106.41. Our next upside target, based on the extension lines, comes in right around 107.50. And if we can tackle that area, we would expect the cross rate might test the 108.85 area on the upside. Our next cross we want to take a look at today is the British pound against the Australian dollar. This is a daily chart, and we've highlighted it because today's trading activity has been very technical. We saw a move lower in the cross today. The August high for this currency cross rate down to the September low. We can see that today's intraday high is right around the 38.2% retracement area of this range, whereas today's low is just a little bit below the 23.6% retracement area for this cross rate, this range. We would expect any continued weakness would test this yellow uptrend line coming in on this cross rate, and then possibly moving as low as 1.6877 here, this red horizontal line, which coincides with the September monthly low. So it looks like some continued downward pressure on the sterling Aussie cross rate. Finally today we want to highlight the New Zealand dollar Canadian dollar cross rate, 2 members of the dollar block. We can see yesterday's trading activity. The New Zealand dollar could not get above this 84.82 area here. That level represented Fibonacci extension resistance point. Today's trading activity, we can see the Kiwi has been supported just above this yellow long-term downtrend line coming in here, and then today's intraday high is right around this 84.61 Fibonacci retracement resistance area here. Any continued upside pressure to the Kiwi C dollar cross, we're going to expect will test again this 84.82 area that it reached yesterday, and then possibly go on to test the 85.83 area. We thank you for watching our Forex and CFD Market Focus Report for September 17, 2013.